Hey everyone, thanks for joining. Huge update today. Of course, going to talk to Kurt about revenue. A lot of people asking adjusted EBITDA, revenue. How do we keep the momentum going? So we'll cover all of that. But Kurt,
Cool.
first things first, how are you?
Doing fantastic. How are you, Jason?
Good, good. It's starting to feel like spring, kind of. We're getting
Oh,
there. Snow's
nice,
almost
nice,
gone in Toronto.
nice. And soon the masks get pulled down.
See, 2 weeks away.
It's already happened in
Uh,
Hawaii, man. We're mask free.
hey, we got to knock on every wood possible. But
Yeah,
yes, things are looking
exactly,
good.
exactly,
But
exactly.
look, let's QYOU reports 5.7 million in revs in Q4 2021. First things first, congratulations. Obviously, a lot of questions. Of course, Q crushed it. Do you want to talk about, hey, what went into the increasing revenue numbers, and we'll go from there?
Yeah. Look, last year we were a one-channel business, and we ended the year as a one-channel business, and started this year as a one-channel business. And the we just continued with strong revenue growth in every way with our advertisers, with ratings that settled into the mid 30s, but continued to deliver really strong advertisers and rates that we were getting. And we kind of made it a goal because we knew that in 2022 we were really going to build the business and invest in the business and launch more channels and start to do some new things that I'm not even going to talk about today, but are for 2022. But before we did that, we kind of wanted to really have a quarter where we said, okay, is the business solid? Is the Q USA business or the Q India businesses, are they solid? Can they operate? Do we have the people? Can we do that? Because if we're going to start to invest, we want to make sure the foundation is there. And that's really what we went after last quarter. And I feel like we got there. I mean, that's why we made a big point out of the fact that both businesses were EBITDA positive on a cash basis. And we'll talk in a second about adjusted EBITDA and what that means and why we use that. But the bottom line is that's what we really wanted to do. And so we achieved that. We hit that. Of course, we grew revenue. Of course, we kept going in the right direction. But there's always seasonality quarter to quarter with stuff and other things. What we know is this. Calendar 2021, when we settle into our new fiscal year and get into 2022, we're going to have somewhere between what I would describe as significant to dramatic revenue growth on a year-over-year basis. We expect that to continue in the years that are coming after that. And that hasn't even, that didn't even happen last year, that we had the force of the additional channels that we're launching in Q1 and beyond this year, and some of the other products and things that we'll be doing in the second half of the year. So we see this being, kind of the rocket ship is now on the launch pad. So now let's go. Let's make it happen. It was very, very gratifying on that level.
Yeah, no, and again, like congratulations. I want to say too, and I stole this comment from someone online. They said, wow, a venture company that beats revenue guidance. Has this happened before? Question mark.
Yeah, no kidding. Yeah.
So
I
obviously,
wasn't even sandbagging. It just happened that way. Yeah.
I mean, hey, you guys didn't only just beat it from a little bit, you beat it by a decent margin. And a lot of questions came up, adjusted EBITDA. Do we want to kind of cover that? I think that was one of the biggest. Oh, wait, does this mean QYOU is profitable? So
Yeah, well,
curious if you
look,
want to answer that.
there's a lot of companies that use what's called adjusted EBITDA. Adjusted EBITDA isn't always defined the same way, so that and I'm not talking about just small cap TSXV type companies. I mean, Uber uses adjusted EBITDA. If you go and you read Uber's earnings report, they'll talk about how they made money for one of the first quarters ever on an adjusted EBITDA basis. Why do they do that? Because one of the big things that you take as a hit on a P&L is share-based comp and stock-based compensation. And look, the reality is that share-based comp is real and it does exist. But as an example, there was a lot of time in the lean years where even people like myself were compensated with shares in a way to keep us from saying, okay, I've had enough of this, I'm leaving. And so when those vest, you take that as a P&L hit. That doesn't mean I'm not selling any shares. Doesn't mean that there's actually a cash hit that happens on the company, but it's when the vesting occurs that you take that. So that's one big thing that a lot of companies use adjusted EBITDA for. There's also the concept of depreciation, amortization of certain things that we do in terms of our programming. There's also marketing credits and other things that we get through our Times of India relationship that come as a cash. They're treated as cash on the P&L. So what happens is we report a loss for the quarter of $1.9 million. Well, over 1.6 million of that is non-cash. So that wasn't cash that went out the door. It's non-cash. Yes, it shows up on the P&L, and people who are sophisticated in accounting will understand all this stuff. But we think investors are interested in cash. What I get asked about all the time is, what's your burn rate? Well, when someone asks me what our burn rate is, they're asking me, how much cash are we burning every month? Well, the reality is in Q4, we just burned over a little bit over 100,000 Canadian a month in cash. Well, that's like we've never had that happen. And what does that relate to? That's all the corporate stuff that's being publicly listed, all the legal stuff that we've got to do, all the accounting stuff that we've got to do, audits, et cetera, et cetera. The two operating business units, QUSA and Q India, were both cash flow positive, just a little bit, so really break even, but they were both cash flow positive for the quarter. That's a huge step for us. We've never done that before. And so, that was what I meant when I was saying we built the foundation to be able to grow off of, and that's why it's so important, and that's why we think it's important for investors to understand, look at it, go, oh my God, they burned $1.9 million. What's going on, et cetera, et cetera. They're burning, $600,000 a month in cash. No. We burned $115,000 a month in cash in Q4. And again, when we're sitting on $6 million plus, that's not a lot.
Yeah, 100% agree. People are asking for, and the underlying question is, are they going to need to raise money soon? And I think you're answering that by all these. So fantastic and very interesting. And this leads to the most exciting part, or the next question of, how does Kurt and QYOU keep this momentum going? So I know you touched on it a little earlier, but maybe want to dive into a little bit more on the reasons why. I know we've talked about, a new channel coming and so on and so forth. Is there anything you want to kind of address in terms of how do we keep this momentum going for 2022?
Yeah, I mean, look, we're launching 2 new channels this quarter that we've already announced: the Marathi channel, which is a broadcast channel, and the animation channel, QYOU Kahania, that's a digital channel. We expect that we will, it's very likely, I'll say, that we will launch at least another channel or 2, or maybe even 3 in 2022. We haven't made those exact decisions yet, but we're already working in that direction right now as we speak. What are we trying to do? We're trying to build a large portfolio of content assets that we can then exploit through digital channels and broadcast channels. As we do that, that grows our revenue, that grows our brand strength, that grows our customer base. Everything grows alongside that. The other thing that people have to pay attention to is I've spoken a lot about social commerce. I've spoken a lot about interactivity and gamification. We announced last December our relationship with the company Mazzalo. That's a rewards-based platform for viewership. Trust me, we're looking at everything of where the world's going, not where it is right now. We're using the Wayne Gretzky skate to where the puck's going, not to where it is. And we think that India is unbelievably well positioned as a marketplace. And we also think that the creator economy and the digital economy and the power of Instagram and TikTok and all these platforms is fundamental to where the world is going. Well, we're doing a lot of work in skating to where that's going to take place. And so 2022, I mean, this is just the beginning. 2021, we were a 1-channel business, Hindi channel. We're going to be so much further past that by the end of this year. It'll make people's heads spin. Will all of that translate into revenue? No. Will some of that translate into cost? Yes. But the ratio between those two will be moving always in the right direction. And the power of what we're building and where we're going to take this over the next 3 to 5 years will really be significant. So it's what I said in my quote in the press release. We're better positioned right now than we've ever been in our history by far.
Yeah. Oh, and it feels like it. I mean, exciting momentum and tons of new things coming. And here's one last question for you. And I think it's interesting, and just to get the answer, because I've seen it a couple times now, is, hey, there's real movies coming out. Batman just came out, a bunch of other ones now coming out. Hey, COVID feels like it's ending. How are we seeing on the growth on the QYOU USA influencer side of things? And also, I imagine the same thing kind of coming in India with all their movies. I'm curious if you can talk on the influencer side of the business at all, on that side of the growth.
Yeah, both the QUSA business and Chatterbox are rocking right now. And QUSA's like sweet spot where it has real strength is on TikTok. And anybody who knows anything about the short form social content space knows that TikTok is just rocketing right now. And it's become a mainstream platform for brands to market their products. So we're getting a lot of benefit from that, and you're going to see major growth happen in the U.S. business today. We're also seeing it happen in the Chatterbox space. I mean, one of the big benefits of COVID, which sounds like a horrible thing to say, is people were at home, so television viewership went up. The whole marketplace of television viewership has dropped overall a little bit because people are back out doing things again. But the flip side of all of that is that products and goods are being sold again now aggressively because people are going back to stores and places, especially in India. And so people are back out on the streets and shopping and doing things again. So that makes up for the other side of it. So our influencer marketing business, our advertising business, we look to both of those to be extremely strong, both in the US and in India, assuming, fingers crossed, that we don't, get kicked in the head by a COVID variant that hasn't been seen yet.
Fingers crossed, knock on wood. But
Yeah,
look,
forever.
really appreciate you doing this as always. A lot of good questions. Obviously, congratulations. A lot of people didn't expect that EBITDA number to be thrown in there. So I know I speak for a lot of people. I want to say thanks for that and congratulations. Anything else you wanted in a kind of financial,
Yeah.
revenue video?
Yeah, I mean, I just think, look, we're as frustrated as any shareholder is with our share price right now. It just does not feel it's fair given where we are with our business and where we're headed with our business. Everybody who listens to this, who's playing in smaller microcap space in any way, shape, or form, knows that the entire space has been just rocked and devastated over the last 6 months. So, we don't find ourselves in any worse position than any others, and probably we're in a better position than most in terms of, what's happened with our share price. At the end of the day, we're here for the long haul. I've said it over and over again. This is a 3, 5, 7, 10-year, march that we're on. That's why we're looking at things like Web3 and metaverse and all that stuff that we look at all the time, because we see where the world's going right now. And so, as we've always done, we're going to use the foundation of our channels business to build our brand, to build our customer base, to reach a couple 100 million people a week, up from the 100 million that we reach in the current marketplace. And as we do that, we'll start to shift into these new areas and see new areas of growth and expansion. So super exciting times. And eventually, point being, is our share price will catch up to all that. It's inevitable.
Incredible to think you guys basically touched 3 times the size of Canada in a week in terms of number of people. So
Yeah,
incredible.
yeah, no, that's
Well,
amazing.
awesome. Look, thanks so much for taking the time. And you dropped some teasers there, some hopefully exciting stuff coming in 2022. So looking forward to doing some more videos soon.
Awesome. Thanks, Jason.